Hello everyone, welcome to another beautiful episode with JayFx House. This is our episode 8 on the Wyckoff mentorship, and on this episode we will be discussing more with the ebook, and we are coming to the conclusion and the end of our Wyckoff mentorship. Okay, so this is episode 8. We have discussed about so many aspects of Wyckoff. So on this episode, we're going to be discussing more on the common pitfalls and misconceptions you can find within Wyckoff and most of the misunderstanding that could lead to major confusions when you're trying to identify the schematics or when you're trying to take a trade. Okay, so this is your episode 8, and if you're new to the channel, you can go check out other episodes to be able to understand more and to also catch up with the classes and the understanding of how to use the Wyckoff strategy. All right. So for those of you who are not familiar with the Telegram community, there's a community on Telegram. You can join us there. We can all, share charts and ideas together to also help grow the community and also to assist in your daily trade. So the link is in the description and you can join us for free. Okay. So I'm currently reading from an ebook, which is available for you. You can also have the ebook for free. It's also in the description. Okay. All right. So one of the most common pitfalls people find in Wyckoff method is misinterpretation of market phases. One of the common mistakes traders find is trying to understand which phase they are in at the moment. Okay, so we have this confusion when it comes to reaccumulation and redistribution, which if you check within our mentorship classes, I made that very, very clear, how to identify a reaccumulation from a redistribution just to make sure that we don't find ourselves in those situations. Okay. So these are one of the common mistakes traders find. The reaccumulation and the redistribution are patterns which are found in a trend, right? They're patterns found in trends that are already in a particular direction. While the accumulation and distribution are patterns you find at reversal points. Okay, so you're going to look for an accumulation. It has to be in a market where you are expecting a reversal from the previous trend, might be bullish or bearish. If it's bearish and it's reversing to bullish, then it's an accumulation. If it's bullish and it's reversing to bearish, it's a distribution. But if it's in an uptrend and you are looking for a continuation pattern to get in on the trade, then you'll be looking at a reaccumulation. If it's a downtrend and you're looking for a continuation into the trend, then you're looking at a redistribution. So this is one of the most common mistakes traders find when they could not, use the fundamental principles of Wyckoff to identify a schematic, basically just using the pattern. So the schematic principles are very, very helpful as well, because if you know the principles, then you get to use them while you use the schematic patterns, which are all available within this ebook I'm reading from. Okay. Second misconception traders find are overemphasizing on a particular schematic. Like I said earlier, you have to use the principles as well. Like looking at a reaccumulation and a distribution actually looks alike. They look alike. This is because the reaccumulation is likely to be a failed distribution. Like I said earlier, a redistribution is a pattern you find at the continuation of a downtrend. Sorry, that is for a redistribution. And the pattern you find at the continuation of an uptrend is a reaccumulation. Okay, so a redistribution is something you find around this spot, mostly within discounts. All right, but the price is likely to continue bearish. Okay, so something like that now, you could be thinking from just looking at the schematic, you might be thinking this is an accumulation and you're expecting something like this. Okay, so overemphasizing that this is an accumulation, not a redistribution, or having your mindset on a particular concept is a very, 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 very wrong thing to do when it comes to Wyckoff, because most of the terms you find on the schematics are very similar. All right, so the principles and the concepts behind supply and demand are things that can help you as well to get over most of these mistakes we find on the charts. So emphasizing on a particular schematic is something that could get you in big trouble when it comes to understanding Wyckoff. You have to be able to go through the guidelines and also using the principles and the fundamental concepts to identify what you think is on the chart. So there are more options and more breakdowns available within this ebook. It's very, very free. It's not yet for sale. It's available on the Telegram channel for those of you who don't have it yet, okay? One of the misconceptions is also avoiding volume. Most people intend to purposely ignore the use of volumes when it comes to Wyckoff. I don't use it mostly, so I'm also a victim of this, but it's very, very important. And most of the times I also use it to confirm my schematic. Volumes is a very good tool because it helps you to understand the correlation between price action and the volume of the momentum and the equity, or you could say liquidity being flowed within that consolidation point. Okay, so volume is something that is very, 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 very helpful when it comes to understanding the key aspects of Wyckoff and also how to get in on a schematic. We also have overtrading and emotional bias. These are one of the most common mistakes as well people do is becoming emotional and thinking the schematic is going to be riding up till the last point. Okay, so you need to understand the schematic is there for you to understand price action, not to manage your risk, your emotions, or your trading plan. So using Wyckoff still requires you to have a trading plan, a risk management plan, and also manage your capital to match what you're looking at the moment using price action. So over trading and emotional bias are things that can also affect you a lot when it comes to using Wyckoff, and you have to be able to deal with them as you go through the schematics as well. Chasing price moves. Now, this is one of the common mistakes that is not just within Wyckoff, but within other schematics as well. Okay, so you can have so many mistakes when it comes to understanding price action. You can have so many mistakes. And these are things that cause issues for us along the way while we're trying to trade. You can't be chasing over a price action which you think like a market structure and ignoring the trend. Market structure is key, but the trend is your friend. So you need to actually understand the trend while you use whichever time frame you're using to trade, and also understand the structure on multiple time frames as well to give you that insight. You can do this, and you can also use the principles and understand the positive price actions to understand the schematics you're using. Okay, these are very, very important, and these are very, 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 very helpful for you as well. So as you can see, we have other breakdowns available within the ebook. I'm not going to make this one very long for you. I want you guys to be able to go through this as we go to the end of the series. And I want you to also have insights from the ebook as well, which is why we created this series in the first place. It's for you to help is to help you understand more on what you're doing when you are on the chart, and also while you're reading the ebook. So please go check it out and come back to the series and do your research to be able to understand your concepts very, very well, okay? Welcome to JayFx House, and those of you who are new, thank you for joining the channel. See you on the next episode. You're welcome.